We've all seen the headlines. One day, Bitcoin is making people millionaires, and the next, it's wiping out fortunes in a flash. But what if? What if you could get that thrilling upside of Bitcoin, but with a safety net? Today, we're going to dig into a new kind of investment that promises exactly that. Let's see if it actually holds up. So, here's our game plan for today. First, we're going to tackle the big elephant in the room, Bitcoin's wild volatility. Then, we'll introduce a new ETF with a pretty bold promise. We'll pop the hood to see how it works, see how it holds up in a real-world stress test, and finally, get into the crucial fine print every single investor needs to know. All right, first up, let's talk about the big reason we're even having this conversation, Bitcoin's infamous roller coaster ride. The chance for absolutely massive gains is tied directly to the risk of equally massive drops. It's that kind of financial whiplash that keeps so many potential investors just watching from the sidelines.
So, that's the million-dollar question, isn't it? How do you capture that Bitcoin lightning in a bottle without getting totally fried in the process? How can you possibly build a safety net for an asset that seems to love defying gravity? Well, this is the exact puzzle a new type of ETF is trying to solve.
And Matt Kaufman from Calamos just hits the nail on the head here. That epic volatility he's talking about, it isn't just a feature, it's a giant wall. A wall that's kept a huge number of would-be investors out of the game. And that's exactly why there's now a market for a safer way in.
So what's the big solution? Well, imagine this. You get to ride the Bitcoin wave when it's going up, but if a storm hits and the whole thing comes crashing down, you've got this contractual lifeboat that guarantees you won't lose your original investment. Sounds kind of impossible, right?
Well, that is precisely the promise coming from Calamos. They've launched the world's first ETF of its kind, with the ticker CBOJ, and it was engineered with one primary goal in mind: 100% downside protection.
Okay, so here's the deal, boiled down. CBOJ aims to get you Bitcoin's potential growth, but, and this is a big but, there's a ceiling on how much you can make. In exchange for capping your gains, the fund promises to protect 100% of your initial investment over a one-year period. It's a risk-managed way to dip your toes into the crypto waters.
All right, now this is where it gets really, really interesting. How in the world can they promise 100% protection? I mean, it's not magic, it's some pretty clever financial engineering. So let's pop the hood and see what's going on.
So here's the crazy part. To give you Bitcoin exposure, you'd think the fund would, buy Bitcoin, but it doesn't, not a single coin. It doesn't hold a single Satoshi. So how on earth can it track the price and offer that protection?
Think of it like a financial cocktail. The main ingredient, the base, is a huge portion of ultra-safe US Treasuries. That's the backbone that makes sure your principal is safe. Then to give it some kick, they add a shot of something more potent, options contracts that track a Bitcoin index. This is what gives you that growth potential. So it's synthetic exposure, not direct ownership. It's safe, but with a kick.
A strategy can sound great on paper, but the real test is what happens when things get ugly in the real world. How does this thing actually perform when the market gets choppy? Well, CBOJ recently faced the perfect storm, a real-world stress test.
So not long after it launched, Bitcoin's price just took a nosedive, dropping over 16%, an absolute nightmare for anyone holding Bitcoin directly. But during that exact same time, CBJ barely even flinched, falling less than 1%. This is that promise of protection actually delivered.
And you can see that difference so clearly right here. Just look at the cliff dive that Bitcoin took. Now look at CPJA. It's almost a flat line. I mean, this visual just perfectly captures the fund's stability when the rest of the market was pretty much in a free fall.
So let's just put that number into perspective for a second. While regular Bitcoin investors were probably checking their portfolios with this feeling of dread, seeing they were down over 16%, CBOJ holders saw this tiny dip of less than a single percent. The protective structure didn't just work in theory, it worked exactly as it was advertised.
Okay, so 100% protection. It sounds almost too good to be true, right? And that's exactly why we have to read the fine print. This safety net comes with some very specific rules and, yes, some trade-offs.
First thing, and this is absolutely critical, is something called the outcome period. That 100% protection guarantee isn't something that happens day to day. It only applies if you hold your shares for the entire one-year term. You really have to be in it for that whole year to get the benefit.
And the second big thing is the cap rate. This is the trade-off for all that safety.
In exchange for basically eliminating the downside risk, your potential gains on the upside are capped at a specific percentage. That cap gets set at the start of the one-year period, and then it's reset every year.
So let's just quickly recap the key rules here. Number 1, to get that 100% protection, you must hold for the full year, no exceptions. 2, if you sell early, that protection is gone and you could absolutely lose money. 3, your upside is limited by that preset cap. 4, every year the whole thing resets with a new cap and a fresh layer of protection. And oh yeah, don't forget, there's an annual management fee of 0.69%.
So the big takeaway here is pretty clear. This product isn't for the crypto thrill seeker who's chasing those 100x rocket ship gains. CBOJ is built for the cautious investor, the person who's curious about Bitcoin, but, wants to wear a raincoat in a hurricane.
And that really leaves us with a huge question for the future. As crypto keeps going mainstream, are products like this, the ones with built-in guardrails and safety nets, going to be the bridge that finally lets the cautious majority cross over into the world of digital assets? It's a pretty fascinating thought for the future of investing.